Hey YouTube, this is Zach with Achilles Financial. Today we're going to be talking about something a little bit different in shorting positions utilizing put options. The stock or the trust that I'm going to be looking at today is the Invesco QQQ or the QQQ trust, and that trades on the NASDAQ under the ticker symbol QQQ. So this is one that's pretty popular. We've talked about it before on the channel, and I just want to highlight some of the different items that we can look at or utilize and what we need to be aware of when we're looking at options trading. So this is essentially a fund that tracks a lot of the larger tech related stocks, primarily the NASDAQ 100, so the 100 largest companies in the NASDAQ. And you can see what some of those are here in the fund. You've got Apple, Microsoft, Amazon, Google, Facebook, Tesla, Nvidia, PayPal, and Adobe. And you can see just looking on the right hand side that the year-to-date returns nearly across the board have been pretty incredible, and these are all great companies that are extreme powerhouses in their space. So the question is, why would we want to short them? And the original point that I would highlight there is things cannot always go up, and they can't go up at the rate that they've been doing so. You can see just right here, just in terms of some of the growth that they've experienced over the past 5 years, it has been more than 100%, more than really 200, 300% just over the past 3 years. And these are companies that are absolutely massive. So the question here is, why would we want to short that? Well, if I'm looking at the year-to-date spread right here, I want to talk about some of the different items that we're going to look at. And I'm not necessarily looking at this from a technical analysis perspective, but more so just highlighting if we are making these moves for this particular company or for this particular trust, what would cause us to want to kind of make a move here or to actually short it. And the item that I'll highlight here is that they have continuously been moving kind of in this channel steadily upwards. So when I think, hey, there's any potential for a pullback, and something as small as a 3% pullback can actually yield pretty solid results, what I'm looking at here is, will this drop lower? Again, a move from the closing price today of 375 to 360 would be a massive move for a trust this size. What I would be looking at here is to be able to purchase put options to be able to take advantage of that. So if we click on the view option chain capability here in TD Ameritrade, you can see all of the functionality available here on the screen in terms of how you can actually benefit from this. Now, because this is a incredibly actively traded trust, you can see that they have a lot more expiration dates similar to SPY, which is an indices that tracks the S&P 500. So if I were to look at something for the end of September, we'll go all the way to the 30th. You can see that the movement here for another few weeks out is actually pretty inexpensive to be able to play on both the call and the put side. A $5 move for something like this is just over 1.5%. So that means that if the stock were to make a 2% move to the upside and you bought at the money calls, then you would net right at a 30% return, give or take. And the same could be said here on the downside. So we have a lot of potential to be able to use these leverage contracts to be able to make a lot of money. However, that is strictly based off of the moves that the index is making at this point in time. So if we have this upward motion and you're playing those calls and it flattens out like this, then the options premium is going to decrease. So that option for the 375 may have only been worth, here at the 360 level, it may have only been worth $100 or so. As that goes up, as that gets in the money, as that momentum is behind it saying, hey, this is going to continue to go higher, then we actually expect that this is going to have higher premiums associated with it. So instead of it being 520 like we just saw, it may be 920. It'll continue to go up. However, once you hit this plateau and it slows down, like if we look over the past 3 months, we see this plateau where instead of the stock prices going up like this, and again, this is not intended to be used for technical analysis, it's rather just to visualize the concept. where the stocks are going up like this, and then it flattens off like this. What's happening here is that momentum is dying. And so without that momentum, we're losing out on some of the volatility for that option, and the price of those options are going to decrease. The reason why I highlight that is because while we do have the capability to see that the options premiums are increasing because this is going down, if this were to bounce off the 370 level, if this were to bounce in futures tomorrow, then you would see the options premium associated with this contract decrease pretty dramatically to not only the downside but the upside as well, even if it was moving that direction, because we're dealing with the past 3 months where it's been going up month over month over month, and then we're now seeing it decline a little bit. So if we trade sideways, that is not good for options contracts because the premium is going to be dropping. The reason why I highlight all of this is because we've had 3 to 5 days of down stock market days. I believe this past Monday, which was yesterday, September 13th, was the first positive day on the market to break a 5-day losing streak, because we saw that people think, hey, now we can load up on puts so that we have the capability to cash in if we see another drawback. And I want to highlight that if the market drops by 5%, yes, you will make a lot of money. But if it drops by 1%, maybe 1.5%, and bounces, what will actually happen is, even though the stock price is lower, especially on a fund like QQQ, which has so much potential to drop due to the seen evaluations in the portfolio, because of that leverage capability, you're actually going to see those prices drop even if it moves in the direction you expect it to, just due to the fact that the options market will price in, hey, maybe this won't fall as fast as we think it is. And what can actually occur there is you can be trying to catch a falling knife and end up missing and getting hurt instead. So I definitely want to encourage that, yes, options have a place in your portfolio. They are a very risky type of investment in assets. You should make sure that you manage that risk appropriately. But they do have the capability to make a lot of money. But that doesn't mean you need to go all in, because again, if we trade sideways, you're going to end up losing some of that premium, whether to the upside or the downside. So if you've made it this far, please consider leaving a like and subscribe, as it helps the channel to grow. And if you have any questions, drop those down in the comment section down below, or feel free to check out the Discord, which is linked in the description. So thanks for watching. Hope you found this helpful, and I'll talk to you later.